Welcome to this week's Market Minute. I'm Cody Moore with Wealth E&P. This week, the Fed is at their much anticipated September meeting, where the expectations we discussed last time are that they will reduce interest rates by 25 to 50 basis points. So we're going to take a look at some of the data relevant to their meeting this week and expectations for the future. So here's a graph just on the producer price index as well as the consumer price index, which is commonly referred to as the inflation rate or looked to for the inflation rate. So here we can see on the far right of the chart, we are getting back down to the Fed's 2% inflation target, which is good news. Similar to the information, if you saw our last video, this is the implied rate cuts by looking at the 30-day Fed funds futures rate on what will happen and expectations for the rest of the year. So all that to say, the market expects them to cut rates by 1% by the end of the year. So last time we did discuss that we don't anticipate the Fed to be quite as aggressive as the market expects, and probably curious why we wouldn't be rooting for interest rates to be cut as quickly as possible. So this chart here explains a little bit of background on why that would be the case. So the blue line here is going to be inflation from 1966 to 82, and inflation over the last 10 years here looks eerily similar to what happened before. So the hope for our team is that they don't decrease interest rates too aggressively and have a second spike here of inflation like they did back in the late 70s. So with that, if you got any specific questions on any of this information, please feel free to give us a call or check out our website, wealthep.com. Thanks. We'll talk to you soon.